Hello everyone, welcome to this episode of my happy new year and welcome to this episode of Learning with Me. So in today's video, I've captioned this video the importance of time in institutional order flow. So we'll just get right into it. One thing I want all of you to understand is you don't hop into the markets blindly. You don't hop into the markets at any time you wish. The markets are not like that. Everything, because I personally believe that these markets are run by AI, and after seeing it wash, rinse and repeat every single day, I have come to the conclusion that the markets are run by artificial intelligence and not buying pressure, selling pressure, or whatever it is. So at specific times of the day, like specific sessions, the market makes a move, and if you get into understanding session time, you're really going to have a whole hang of it, because the moves and the pushes begin at every single time within a session. And if you hop just right in the middle of the session, or if you hop once the session has already started kicking, you are literally giving yourself to the market to be liquidity. You're going to be used for liquidity sweeps. You're not going to enjoy your time in the market. So about the session times, about 4 sessions that I give major relevance to in these markets, and then those sessions are the Asian session, the Frankfurt session, and then London session, then finally the New York session, in that order. So according to the times I use, GMT or UTC if you're using TradingView. And to me, the Asian session opens up at 00, and you're looking for your entry windows between 00 and 1 for the Asian session. I know someone's going to tell me opens at 23. Yes, that's why I started this video with I would call. So this is my personal opinion I'm sharing with you, and based off what I've learned, based off of what I've seen happen in the markets, the Asian session starts at 00, and you're looking for your entry windows anytime between the first hour of opening of the Asian window, between 00 and then 1. And also, I forgot to mention the DXY opening. The DXY is going to open exactly at 1 a.m. UTC GMT. So then after we go to Frankfurt. So the Frankfurt session is supposed to open somewhere around 7 a.m. And if you want to use the Frankfurt session for entries, a big move usually happens at Frankfurt, but it's a very big and fast move. Frankfurt usually does a liquidity sweep to the upside or downside, depending on where order flow wants to manifest. And then after that, we're going to have the London session, which in my opinion begins at 8. And if you'd want your entry anytime between 9 and 10, optimally 9:30. And then the New York session starts somewhere at, I'd say it could open at early as 13, but if you want your optimal entries, anytime between 14, 14:30, 14:45. So that's it. I'll leave the times on the screen, and just for a bit. So the first session we went about was Asia. Then we have the Frankfurt opening. Okay, let's speak about DXY. The DXY opens at, for those who don't know what the DXY is the dollar index. So the dollar index opens at 01. Frankfurt section opens at, just make this FF 7. London at 9, 8 to 9, and NY between 13 to 14. So yeah, if anyone wants to keep track of these sessions, that's it for the session opening times. So yeah, about how to use these, all I'm trying to tell you is the sessions, should I say, overlap each other, but they work in conjunction with each other. There's a runoff of Asia into Frankfurt liquidity. Frankfurt is supposed to pick up a liquidity point from the Asian range, run it into London. London also runs to a major liquidity point for New York, and it's more like ping pong within these sessions. So if you understand what each session wants to do, trading should be within the sessions. Trading within the sessions, intraday trading should be relatively easier to you. So let's just hop onto the charts, and then I'll show for any random day, understanding institutional order flow with time, how important time is if you want to get your entries and not, I wouldn't say not being worried about being stopped out, but everyone gets stopped out. But with the more probability that you're aligning with the session's time and you're not setting yourself up to be liquidity, because time is very important in trading. If anybody tells you otherwise, then I wouldn't say they don't know what they're doing, but you should really reevaluate. So let's just pick any random day. Okay, so right here I'm going to denote the sessions. Oh, and yeah, I'm sure a couple of you would have seen the ICT tab. Trying to get through his content, it's a bit, would I say, overwhelming, but for now he's saying a whole lot, and I've only picked up one thing in about 10 videos. But yeah, I'll say it's a nice experience for now. So let's denote our sessions. We're going to have Asia from 00 this Friday. Okay, so today we didn't have the euro open for the Asian session, so let's move back to a day where the euro is open for the Asian session. Let's see. So right here we're going to have our Asian session opening, and if we want to get Frankfurt, at 9. Between the hours of 14. So yeah, let's get this on a smaller time frame. Let's stick to the 15. So right here we had the Asian session open, and usually we know the Asian session is going to range, and sometimes you have it with an aggressive move, sometimes you also have it with a more of a relaxed move. So in this case, the Asian session, all it did was range right here. So what's more important to us is the opening and the close of the Asian session, and I like to denote it with a rectangle. So in this video we're going to talk mostly about the importance of time, and we're not going to delve much into structure. We're going to do that in the next episodes. The way I view structure is entirely different, and I view structure as not entirely lower lows and higher highs, or as it has been denoted. Structure is more of, it literally shows you where the market wants to go, but it's not as clean as everyone says it is, like higher highs and higher lows. And because if you want to go according to that concept, you're going to be stopped out most of the time. So right here we had our session open at 0 and ranged all the way to 7. So we see how the move kicked in at 7. In this video I want you to realize the importance of time. Time is very important in these markets. So right at 7, the move to the upside started, and when Frankfurt closed above these above the high of Asia, all this literally meant was, and I don't see any point of interest within this area. If I had seen a point of interest within this area, that would have changed my bias to maybe shorts, but there was no point of interest within this area. So once Frankfurt session was done, and then the London session opened, the London session also printed above Frankfurt's highs, which is right here, if you guys are paying attention. So this was Frankfurt's high, and then the London session printed above Frankfurt's high. All this is telling you that the institutions are preparing for higher pricing. At this point, nobody wants to go down. If London closes above Frankfurt's high and price does not reflect in a particular point of interest, of which I do not see any here, maybe you do, but I don't. Price is not at a specific point of interest, because anytime there's going to be a switch in price has to align with a particular point of interest at a particular time. That's why in this video I really want to highlight the importance of time, because going on I'm going to be showing you how I enter the markets, and when I start mentioning the times, I don't want people to be confused. So this is what happens with it. I saw London close above Frankfurt's highs, which was Frankfurt printed its high right here, and then London closed above this. So all this meant was we're prepared for higher pricing around this point. So with this, how to get your entries, I literally said you're looking for your entries between for London session, you're looking for your entries between the time period of 8, between the time period of 9 and 9:30. So right here, sorry for the distractions on Telegram. So right here we had 7, and then when it was 9 we had a print above. So what does if we were on a lower time frame, we would have got the entries right here, but since this is the higher time frame, literally all this is what it signifies. London opened up right here, so this was London's lows and this was London's highs. London had clearly shown that we are printing above Frankfurt and we're going for higher pricing. So for this institutional order flow to be invalid, price had to close below London's lows to show us that we're prepared for lower pricing. But once price did not close below this point, all that it shows is we're going up to take liquidity from the previous market data. I don't want to go that far. We're taking liquidity from previous market data. We're running price into an important point of interest. So that's what happened for the session, for the London session. And right here, when New York opened up, we saw the same thing. New York decided to print above London's highs right here. So also showing you that New York is prepared for higher pricing. So we literally, for us to have a wrong bias, or for this institutional order flow to be not correct, all we need is for price to print below the London session's lows. I know this might be okay, to be honest, this shouldn't be so difficult to take in, but once you see it, it will be difficult to unsee it. It's actually that, not say it's that easy, but it's that simple. It's a session's high and a session's low. Literally what the sessions are doing, they're showing you whether they're going to align with structure as it said, or they're going to go against structure. And all we keep seeing here is a session printing consecutive highs above the other session. It's not just any high or low, it has to be within the session. So right here we printed above London's highs, showing us that okay, we're going for prices to the upside. So for this to be invalid, we literally have to close below these points. So this is what the New York session did, printed above London, and then literally just came back for, so this whole retracement is retracing into a premium area. I know for those of you who use the favor stored by other traders like the inner circle trader and the rest, they tell you that any price below 50% of the Fibonacci is within a range. Below 50% for buying is a discount area, and in the other way around it's a premium area. So literally, but I'm going to show you different techniques for entry. I use below 50%, but I have specific figures that I use. I think I made a video on that and archived it. But I have specific Fibonacci levels that I use, and I also look for specific structural points on the lower time frame. Sometimes I'm looking for hidden order blocks, I'm looking for fair value gaps, I'm looking for what I consider my point of interest, my POI. So always after a print above or below, price has to make a retracement into a deep discount or a deep premium area for a push up. So yeah, that's literally what the markets did here. We printed above this session and then we waited for a retracement into a deep premium area, a deep discount area. Like I said, your optimum entry times 14:45, 14:30. I would have personally waited because I knew what I was looking for. So right here 14:45, after 30 minutes into the first hour of the session, then I take my entries. So I know most of you are going to say over here there was let me get rid of the highlighter. So once we had not printed below London's lows, I said London, New York had its lows right here. So once this session failed to print below New York's lows, let me keep using the highlighter, New York printed its lows right here. So once this session that we had opened for the new day, that's between 00 and getting to Frankfurt, that's like 00 to 7. Once Frankfurt failed to print below these lows, all that tells you is our institutional order flow to the upside is still very valid. So I'll leave this part of the chart for you to test, let's say back test, to test with what you just learned here, and then for you to see what each session is trying to do. If the session does not overlap or rule out the previous session's pricing, we're usually going to continue order flow, and if it does, it's preparing you for a switch or a rollover. So that's it for understanding the basic concepts of institutional order flow. I'll see you in the next video. Thank you very much for staying all the way here. Thank you. Make sure to like and subscribe and turn on post notifications for more content.